Hey traders and investors, it's Serge Berger here. One of the most frustrating things that can happen to traders and investors and active investors and things like that is you get into a position and you get a valid signal to, let's say, buy a stock. You then immediately get stopped out, or your pain threshold gets reached within the next day or two or something like that. And then ultimately, after a little while later, the stock continues to move back in the direction you originally thought it would go, and you don't get back in. And that's the key word right there. You didn't get back in. The reason you didn't get back in is because of an ego situation. We, as human beings, don't like to be proven wrong. So once you've been proven wrong by the stock, there's sort of a subconscious thing that happens that tells you, well, listen, if that stock didn't want to play right, I'm not going to get back in. But unless the analysis unless your analysis has changed, or the stock has changed in what it's telling you, there's no rational reason for you not to get back in. Let me give an example. This is an actual example right here, right now in Facebook. So Facebook's had a really nice move from last May, basically into December. But really, since last July, the stock in the bigger picture has just kind of consolidated in the bigger picture. So to me, the big picture here is bullish. I think ultimately Facebook releases higher through a multi-week lens. So on this day here, which was the 19th of February, Facebook had a really nice rally. So I got in, I bought the stock. But a couple days later, after the stock couldn't follow through, I lost patience. The broader market started looking a little shaky. So for risk management purposes, I got back out. And I'm happy I did. The problem is, or the fact is, that after a few days of going sideways, today, which is Wednesday, March the 4th, the stock is actually releasing higher again. Again, attempting this continuation trade that could ultimately push the stock into the low to mid 80s at least to start with. So right now, based on this movement and just the fact that the stock is still very bullishly positioned by my analysis, there is absolutely no rational reason why I shouldn't get back into this trade. And so I did. I got back in. But this is one of the most difficult things for folks to do, is to get back into a trade once they've gotten stopped out. And again, if you can start learning how to do this consistently and get over your ego and don't get scared, as long as your analysis has not changed, there is no reason to not get back in. I hope this makes sense, guys, and I'm sure if you can learn this, your returns will become much more steady, much more smooth, and you will most likely end up making money with a lot less turmoil in your portfolio. If you got any questions, you can hit me up on Twitter. My Twitter handle is SteadyTrader, and I'll see you in the next video.